Everyone, thanks for joining our podcast, Startup Pulse. Today we are featuring CTI, Corporate Tax Incentive Firm. It is a tax consultancy firm specializing in incentives that provides direct financial savings to businesses. They started their business in 2001 and they have secured billions for their clients with their expert know-how and personalized services. We have Kate Johnson. She is the Managing Director of R&D Ops, and Francis Wu, Director of Client Relations from CTI. Welcome you to the show. And why don't we start with Francis? Francis, please go ahead, introduce your background and introduce yourself, your role with the company.
Thank you so much, Anshuman. It's so great to be here. My name is Frances, like you mentioned. I have been with CTI, or Corporate Tax Incentives, for 15 years, and I've done a little bit of everything since I've started when we had maybe about 5 employees. And so currently, as the Director of Client Relations, helping oversee and manage some of those relationships that we have and future relationships, so partnerships and things of that sort. And so a little bit of everything currently, more so on the customer, the client appreciation or client relations side.
So much, Francis. So 15 years, which is quite unheard of in today's day and age. Who stays with the company for 15 years? So the company must be doing something great, and you must be very, very happy to devote 15 years of your life to this company. So tell us a little about that, why are you stuck with this company for 15 years?
Absolutely. So, one, all of my friends say the same thing. 15 years at the same company, especially in the Bay Area where there's a lot of startups. First and foremost, it's definitely the services that we offer, but also the quality and the attention to detail and customer service. So with all of those packaged together, providing that service, helping out businesses, especially in areas that they may not have realized that they can take advantage of when it comes to some of these credits and incentives that are available and out there. So that's definitely the number one reason why I've stuck around so long. Also, the culture and the people really here at Corporate Tax Incentives that have helped shape who I am, but also my voice in this company.
So you have certainly seen the company grow, Francis. So thank you for your service to the company. And I love when the company has been built on a strong foundation where employees are sticking with the company for such a long period. So now we have Kate Johnson. She is the Managing Director of R&D Ops. Go ahead and please introduce yourself.
Yeah, absolutely. Thank you so much for having us. As my title would suggest, I oversee the implementation of all of our R&D tax credit studies. I have a team of both engineers, attorneys, CPAs, who research companies, identify what those correct incentives are going to be for them, and then calculate and deliver those R&D tax credits. My background, I am a licensed attorney. I'm licensed in 2 states, and I've been practicing in the R&D space for just shy of 10 years now. Not all at CTI. I've been at a couple other, boutique firms and started some practices there, but got to CTI as fast as I could.
Thank you so much, Kate. This is exciting. You are an attorney. Engineers and CPAs work for you in building CTI service offerings. So, this is great. So you certainly bring in the new energy, new blood to the company and then, help in growing the company. Very nice. The founders of CTI, what is their story?
So currently, we have 3 founders or 3 owners of Corporate Tax Incentives. 2 of the 3, they are CPAs and former tax auditors, and one being Taz Singh, who is a Thai member. I don't know if I should include that. I'm sorry if I didn't.
No, this is absolutely right. Right, and I know Taj very well. So yeah, he's a Thai chapter member also. Yes.
Yes, so Taz is a Thai chapter member, and Darren Labrie, he is the other partner, CPA, and former tax auditor. The third partner, he is our CTO, Chief Technology Officer. We do have proprietary software that we've built in-house, and so that third partner really helps drive that technology, that internal software that we ourselves utilize. That's the background and the story of the three founders, the three principals.
Thank you so much. So you guys started in 2001 and built the company from there. Is the service offering of corporate tax incentive or CTI?
Yes. So our different service lines or service areas that we help businesses with would be at a federal, state, or local level, specifically focusing on research and development tax credits, employment incentive, and also property incentives. And then there's also energy incentives as well. So those are some of the areas that we focus on, and we can dive deeper into specific areas and also explore not just within the United States, but international as well. So we bring a consultative approach when it comes to different types of businesses and their age as far as when the business was started, and if they also have other maybe employees outside of the United States. And so we're able to take a holistic look and look at everything together.
So, Kate, for you, Francis spoke about R&D, credit, energy, and construction. So these are three very different industry sector. Construction is very, very different from what is happening in a well-established engineering firm where there is a lot of spent on R&D, or a med devices firm, or a health tech type of companies, as well as in startups when we are building a technology product. A lot goes into the R&D, and here we are going to share some stories today how to claim those R&D credits. So since you are the R&D Ops MD, through an example of how difficult or different it is in catering to three different industry verticals for the same R&D credit. So how different is R&D credit for a med devices company or a software company to something which is happening in tax, in construction or in the energy sector?
Yeah, absolutely. It's a great question. So in terms of how we approach the studies, that stays the same. We have a really solid process with the foundation that Francis mentioned in our proprietary software, but the approaches are different. Those are not only very different types of activities, but they're also different people, right? The people who start startup software companies are not necessarily the same people who have a 50-year construction business, just different types of folks. And so we really take, as Francis mentioned, a consultative approach. Really the first step in anything is understanding that company's business, understanding what is necessary there. We certainly, and my team, always are starting with the R&D tax credit, but we're also looking for other opportunities. Did that biotech company that you mentioned or that manufacturing company just buy a new warehouse? Well, cost segregation might be something they also want to take a look at, even though obviously what I'm focused on is their research and development tax credit. And so each of those we'll walk through identifying activities, identifying expenses. Our first phase of every study is really a feasibility and identifying what are the possibilities here, where do we expect to find activities, and how do we tie those activities to expenses. At the sort of basic level, that's what an R&D tax credit study is. And the complexity, it just really depends on the company. Some larger, multinational, multi-department, different types of activities may take a little longer, may require talking to a few more people. But again, ultimately, the process is the same because we rely on that experience and the expertise we have on our team. It may also mean assigning a different person. We have people who, have backgrounds in software, including myself. We have people who have backgrounds in construction. They're best suited to do those different types of projects.
So let me understand the R&D tax credit. I have done some research. I know a little about it, but I would like to hear it from the pro. It would be for the benefit of our audience also, so that they can understand the R&D tax credit, and then they might come to you to get help from you. So what is R&D credit tax?
Absolutely. So the R&D tax credit was enacted in 1981. It has been a long established part of the tax code. It was made permanent with the PATH Act in 2016. So we never have to worry about re-upping year over year. It is a dollar for dollar offset in tax liability that is ultimately keyed to the expenses you're investing in research and development. Research and development under the tax code is defined very broadly as any new development of product, process, software, or other related, technique, formula. And so really anybody that's doing anything to create new products, process, software, or improve upon existing, those are going to be people who likely have qualified activity. I think it's also important to note that that newness doesn't have to be new to the world. It is something that is new to the company or an innovation in what they're already doing. So this isn't, just lab coats and beakers, and this certainly isn't something that has to be, patentable or, a brand new innovation. Oftentimes what we see is these are incremental improvements or custom offerings for your clients. Some people really overlook that. I was just talking to an engineering firm this morning, and she was like, every day we're solving problems. Every day we're, doing something new and different, but that can't really be R&D, can it? And it is. And it's exactly what the credit was meant to incentivize. It was meant to keep technical jobs in the United States, and it was meant to incentivize companies who were doing so. As I mentioned, dollar for dollar offset in tax liability. Typically, that's going to be income tax. But for certain startup companies, in the first few years of revenue or even pre-revenue, it can also be used to offset payroll tax. And that incentive just increased this year, actually doubled. So we have a lot of companies that are very excited to take advantage of that additional benefit.
So enacted in 1981. And since then, the government has given us this great opportunity to keep the jobs in India, in the US. So I heard Francis say that, maybe the payroll credit and, if somebody in today's global economy, all these large companies and small companies also, they are going where the talent is. So let me put a use case to both of you. If there is a software development company, a startup, who have employees in India who is really working on the core product which qualifies for R&D. So will they be able to, if the company is based here in the US, to take benefit out of the program, or they don't get considered here in the US?
So if they have employees and or expenses that are in the United States, they would be able to take it. Specifically for the U.S. R&D tax credit. So the U.S. R&D tax credit requires expenses in the U.S. or its territories. That can include employees, obviously like direct wages or founder self-employment income. That can also include third-party contractors, as long as they're physically located in the U.S. or its territories. That's always a little tricky because sometimes, the address on the invoice says New York, but really the folks could be, in Eastern Europe or in India. And then potentially supplies if they're doing any prototyping or new product development, and then cloud computing expenses related typically to software development.
Understood. So this is a question. Yeah, go ahead.
Oh, I was going to say, so we have seen quite a consistent fact pattern is you have, the owners or product managers in the United States sort of driving the development. We'd be able to capture those expenses, but potentially not the developers if all of them are located overseas.
Understood. Francis, you are the Director of Client Relation. What type of questions do you get from the clients on a regular basis?
Oh, I get so many wide range of questions. Just again, it depends on the industry, depends on the age of the business. Geography makes a difference as well. So some of the common questions, whether it's directly from either a startup or an established business, is how can corporate tax incentives help me save money or find some sort of tax credit or incentives, just as a blanket question. So that question itself helps open up further questions on our side to see whether or not there may or may not be a benefit, whether timing right now or possibly in the future, and even looking back in time as well, whether a credit was claimed or not. So there's lots of different questions, but the the number one question that I'll get most often is ways that a business can either prepare to help save money, especially specifically regarding taxes, so tax credits or incentives.
Understood. Great. And I'm sure, on your website, there will be a FAQ page where the startup founders or the new companies trying to engage with you guys can go and, read all those FAQs.
Yeah, we certainly have quite a bit of information kind of detailing the different service offerings that we have and the types of companies and activities that qualify. I think it's always a good place to start, but so much of it is consultative. It is really unique to the company. And so we always appreciate if we can have at least a brief conversation to understand the fact pattern and see where we can help them. Because oftentimes, like I said, it's not necessarily in the places they think we can or the places they initially look.
Okay. What are the pitfalls in filing for R&D credit without a professional help? How easy or how difficult the program is? Can somebody just go on the IRS website and, are there forms that they can fill it out? Or they really need a professional help where they look at all their expenses, all their incomes, and then, look at their past tax returns? How does it work?
Yeah, absolutely. So at its core, filing the R&D tax credit is on the Form 6765. That is available to any tax preparer. But really, the documentation that's necessary is quite substantial. One of the cases from a few years ago, the tax court said it was the most complicated area of the tax code. Unlike a lot of other areas, it's qualitative, not just quantitative. And so that is really tricky for people, especially people who are tax preparers. They're really used to living in just like the numbers world. And in order to qualify for the tax credit, there are obviously expenses tied, and we'll talk about that in a second. But it's necessary to determine that you meet the qualitative standards, affectionately known as the 4-part test, and that each project that you're claiming fits within those standards. Also, just from a filing standpoint, the IRS has continued over the last few years to up the ante in terms of what's necessary to file. There's now substantial additional documentation that's required on any amended return, and some proposed new form for 2024 that would require that information plus more on any originally filed return. Well, quick answer on pitfalls is documentation. You really need to have a sound understanding of the law, what qualifies, and how your projects fit within that criteria. But the other thing is just missing out on benefit. We see so many companies in the software space, especially, who just focus on their engineering team, and they take, the engineering team, but they're missing out on the quality team. They're missing out on their product manager. They're missing out on their testers, who are, doing some of the functional testing, even if their job title wouldn't necessarily suggest it. But also historic tax years. I've never seen somebody claiming it without professional help who looked at anything except the current tax year. At a minimum, you can go back 3 years. Those are open tax returns based on the statute of limitations. And many companies in the startup phase, they can go back to inception. Because of the tax rules around losses, you can carry all of those credits forward to your first taxable year. That can be a really, really powerful benefit, for your first year of revenue, or sometimes for acquisition. This can often be an asset in those types of situations.
So, wow. So for a startup, they got in touch with you, for example, after 7-8 years in business, and you start looking at their files, then, they can really, you guys can help them go from the inception and then, start filing for the tax credit.
Yep,
from
absolutely.
then, utilize it. Wow, that is big. That is big. I think this is one of the, secret in the startup world. I deal with so many startup founders on a regular basis, through our events and through our podcast. People are not aware of this. So I'm so much thankful to both of you to come on the show and, talk about R&D tax credit and help the startup founders to go and, start getting benefit of it. So, so long you must have serviced what? 6,000 customers?
At least,
or
yeah.
Maybe more.
Yeah.
So
I know some customers, and then of course we have a lot of repeat business, right? So we've done many more than that in terms of R&D tax credit studies, doing business with people year over year.
So let's talk a little about the numbers. How much of tax credit have you gotten back so far since you guys started in 2001?
I mean, it's
Big
definitely
number?
in the billions. I don't have an exact number per se, but a lot, like Kate mentioned, a lot of the clients that we do have, that whether they're repeat clients or we're able to find other credits or incentives alongside the R&D tax credit, we'll have multiple opportunities available to those clients, just depending on where they are and or possible expansion, maybe different other business ventures, things like that. So
Wow. So certainly big number. Yeah, go ahead, Kate.
Yeah, I would say I can give you year to date, we've delivered over $10 million in R&D tax credits. The filing deadline's not for another month. There'll be quite a few more before we get there, but that's year to date. I know it's over 10 million.
Year to date. So what, 30 plus 15 days? So in 45 days.
Yes.
Babe, how much time does it take? What is the process? Take us to the process. He goes on your website, fills out the form. What happens next?
Yeah, absolutely. So what happens next is typically Frances or one of her team will reach out, get some preliminary information, see if this is going to be a good fit. Once they identify that's going to be a good opportunity, they'll get handed over to my team. Our study proceeds in 3 phases. So as I mentioned earlier, the first phase is our feasibility phase. At that level, we're gathering financial information, understanding the business, and creating a plan for completing the study. That's going to identify any, major concerns that they may have or we may have regarding their qualification. And it's also going to identify what activities and expenses we expect to capture. At the conclusion of phase 1, we'll deliver a range of credits and expenses that the client can expect for the open tax years we're evaluating. Once we identify that viable benefit, we'll move into phase 2. That's where we really deep dive on those projects, like I mentioned, gathering documentation, confirming qualification, and that allows us to finalize the credits by tying expenses to those activities and projects. At that point, we deliver all of the forms necessary for your CPA or tax preparer to file your return. And then phase 3 is all on us. We deliver a narrative report that includes our financial, legal, and project analysis, which documents the study, as well as the information that we're keeping on file in the event of a review. So yeah.
And how much time, after you have given the application to the IRS, how much time do they need take to process one application?
So the R&D tax credit doesn't, for federal at least, it doesn't have any kind of affirmative application. You file it with your tax return. If you're due a refund on an original return, typical processing time's around 6 weeks. Amended returns a little bit longer. Can't quote you numbers right now. The IRS is very behind. But in terms of an original return, those are typically processed within a few weeks. And then if you're due a refund, you'll get a refund. If it's a payroll offset, those will be filed with your next quarterly return. And again, you'll get an immediate either offset in tax liability, reduce the check you have to write, or get a check in the mail within a few weeks. In terms of our study process, our goal is 90 to 120 days. Sometimes that goes a little bit slower depending on, other priorities the clients have. Essentially, we can move as fast as they can. As soon as we get the information, we'll process it and turn it around. And we're sensitive that business owners, especially in the startup phase, they have other priorities. And so as long as we get things done by the filing deadline, we're happy to be flexible.
120, so 90 to 120 days. And if the startup founder is up and up and, they provide all the documentation to you, so you guys can move really, really fast. And then if it is some kind of a payroll tax credit, then, it will reflect on their upcoming payroll, that they have to pay. If there is overpayment, then, they will get a check back. How do you guys get paid? What is your fee structure for something like this?
Yeah. So it is a success-based fee, and Kate mentioned if a startup is interested in hearing more about the available opportunities, specifically around the R&D or research and development tax credit, reaching out to myself or someone from my team to have the initial conversation. And there is no upfront fees or charges or anything of the sort. We're just trying to see if there is an opportunity for the startup, and if so, discussing what maybe scope of the project, or how many years are we looking at, and if this is a project for now or something to speak about in the future. And so a success-based fee, we do take a percentage, and so we'll be able to provide what that looks like after the initial conversation.
Are you serious? No upfront fee to apply. Come talk to us, and then you start working on the file, and everything is post credit. So if they qualify, if they get funds, then from there you will be getting your fees. Is that right?
So the fee is based on the credit that we identify. And so if there's no viable benefit, then there would be no fee. And that's what I mentioned in our phase 1 as part of that feasibility analysis, is identifying, if there are qualifying activities, if there are qualifying expenses, and if those are going to generate a credit. Usually if the first 2 are checked, we're going to generate a credit, but there are some fact patterns where for whatever reason, there might not be a benefit. At that point, there's no fee to the client. Check back next year, see if the fact pattern changes. And so yes, that percentage is based on the identified benefit.
What other service they can qualify for? So, R&D tax credit is one, or tax incentive is one. What other things CTI can help them with?
So I think potential, I mentioned, if they are acquiring or renovating buildings, cost segregation and 179D can be good opportunities. Cost segregation is not exactly an incentive, but a way of representing capital expenditures so that you maximize the deduction and kind of front load those so that, with the time value of money, you're getting the most benefit out of that investment, or most tax benefit out of that investment. 179D is an energy incentive around, again, building new buildings or renovations. One of the great things is that the standards that you have to exceed are lower than most building codes, certainly in California and in Texas. And so just by building to code, you may very well qualify for any new or renovated commercial buildings. Some of our other stuff is kind of around hiring incentives, and there's certainly things we'll take a look at, but we don't see as much opportunity there for startups. But again, like I said, it's always something we evaluate when we start talking to a business owner is, what's the full scope of their ownership? People who start companies often start many different kinds of companies. And so it might not be the software and tech that is the one doing 179D or having that opportunity, but there may be an availability for that deduction for their real estate investment, things like that. It's not uncommon for us to find different businesses or different incentives with the same concept.
Anything else, Francis, that you would like to add here?
One large piece that Kate touched on is that with all of our service offerings, we include audit support and audit representation. So going back to Taz and Darren's background with being former auditors, we have an audit-centric approach to all of our services or all of our projects. So we provide that peace of mind to not only the taxpayer, but also the tax preparer or the CPA or the accountant. So we're doing our projects thoroughly and by the book. So we're very comfortable in the case that there is a review or an audit, we stand behind the work that we've done. That gives that peace of mind to the startup or the client themselves, knowing that CTI is here and will be here in the case of any sort of review or audit in the future.
This is great. So no upfront fee, and after the application is processed, they get the credit, you get your portion of the fee, and then if there is an audit at a future date, you guys will stand by your work, and you will support that audit in providing all the legal support or the CPA support that is needed to respond to such kind of audit. So there is nothing for a startup founder to lose here. They should be just filling out the application form. I'll be creating a direct link in this podcast so that startup founders can just click to that link, fill out their contact information, and get in touch with Francis and her team to go on this great R&D credit incentive journey. What else would you like to add or, tell your prospective customers, anything from CTI side when they are dealing with some other, partners or someone else, some other service provider, how you're different, if they are already in sync with some other service provider and they need the expert view. Are you guys interested in such kind of cases? And, what is the general outcome?
Yeah. So, go ahead.
I was just going to mention, thinking about even personally, if you go to your dentist and they suggested you needed to get some, maybe something done, you wouldn't, for me personally, I want a second opinion. And so if a startup is currently maybe using another provider, it doesn't hurt to speak to us to get a second opinion. We are very honest. If their other provider is doing a great job, we'll let them know. And if there's areas for improvement, we would also let them know. So not just with the R&D tax credits, but just anything when it's related to credits and incentives. And so having a second review doesn't hurt, and nor does it cost anything. We'd be more than happy to take a look.
Yeah, Kate, what do you have to add on that?
Yeah, I was just going to kind of answer your first question about kind of, is there anything else you want them to know, which is just, I would suggest like reaching out as early as possible. I think one of the things that's tricky with startups is, one, they're so busy in the beginning, just trying to get their feet under them and doing really great work to get towards that, minimally viable product or that first product offering. That they sometimes overlook this. So, pre-revenue, there's opportunities for the payroll offset. And there is a time box around that. It has to be within the first 5 years of revenue. And so it's really disappointing when we get engaged with a startup and we've already lost a couple years of eligibility there. And so, just wanting them to be able to maximize that opportunity. Like Francis was saying, it doesn't hurt to talk to us, and we'll tell you if we don't think this is a this year project. And we'll stay engaged, and we'll keep in touch when it does make sense for them, because that's always what we want, is for this to be a benefit to our clients and for it to put them in the best position possible.
Kate, what I'm hearing is any even idea stage company should be in touch with you, like the way they get in touch with an attorney for the right setup or right vehicle for their company. Should it be a LLC? Should it be a Delaware C Corp, or shall I start my business as a S Corp? So that kind of a thing, that, if they feel that they are going into the R&D side of the business, where their new project or new company will be doing a lot of R&D kind of stuff, coming to you guys and, getting in touch with early on will get them the most benefit, because then you can also help them out that, how to structure the company, how to hire the people, where to hire the people, and give that cost benefit analysis to them. So for the startup founders, what you are waiting for, just fill out the form, touch with Francis and her team, get evaluated. There is no harm in getting a second opinion or even a first opinion about that, do they qualify or not. So this is great. Any closing statement from you, Francis and Kate?
We're just eager to hear from all of you listeners out there, and we appreciate taking the time to speak to us and have us on the podcast today.
Kate.
Yep. Just thank you so much. This has been a lovely conversation, and we look forward to talking again soon.
Good. So founders, please fill out the form and get in touch with Francis and Kate at CTI for your R&D tax credit. Thank you so much.